Welcome to the Deep Dive, the show where we try to cut through the noise and, get you straight to the insights you need.
Glad to be here.
We constantly hear about certain stocks making these absolutely mind-boggling runs, right? Just stratospheric.
Yeah, it definitely grabs headlines.
It makes you wonder, what's really behind all that hype?
Mhm.
Today, we're zeroing in on a company that has done just that. Palantir, ticker symbol PLTR.
Ah, yes, Palantir. Been in the news a lot.
A lot. This data and artificial intelligence company has seen just astonishing stock performance. So our mission today is basically to unpack the core elements of its recent trajectory. We're drawing from a recent article that really dissects its incredible growth and, maybe more importantly, its significant valuation dilemma.
Right, the growth versus the price tag, always a key tension.
Exactly. Okay, let's unpack this and help you understand what's really going on with this high flyer. So when we talk about a meteoric rise for Palantir, we are talking about some truly eye-popping numbers.
No kidding.
In 2024 alone, shares more than quadrupled, rising a staggering 340%.
340%. Wow.
And if you thought, okay, maybe that's going to cool off, think again.
Didn't happen.
Nope. It continued heating up in 2025, rising more than 105% year-to-date, and that's as of July 2025.
Okay, so the momentum just kept going.
Kept going strong. You do the math on that, and it amounts to, well, roughly an 800% gain since the start of 2024.
800%. Just incredible.
To put that into perspective, right, imagine turning $1,000 into $8,000 in just, 18 months?
That's the kind of ride everyone dreams of or maybe has nightmares about, depending on when you jump in.
Exactly. It's that kind of explosive, almost dizzying ride we're talking about.
Yeah.
Shares are currently trading at record highs, sitting at $153.46. Compare that to a 52-week range that started as low as $21.23.
So a huge run-up from the lows.
Massive. It's the kind of chart that, well, it makes some investors incredibly rich and maybe makes others incredibly nervous just looking at it.
Well, the truly compelling aspect here, I think, is how such explosive growth immediately signals, incredible success, but it also raises immediate questions for any investor or, frankly, any curious observer.
Like what are the first questions that pop up?
Well, when a stock climbs 800% in, a year and a half, the first thing you have to ask isn't just, is this sustainable? Right, that's obvious. But also, what specific underlying business drivers are fueling this momentum? Is it actual market share gains, new product lines hitting, or is it just pure speculation driving the price?
Gotcha. Fundamentals versus hype.
Exactly. It's a classic situation where you see this massive momentum and it absolutely begs, a deeper look into the operational reality.
Absolutely. So you mentioned earlier that explosive growth raises immediate questions. So if Palantir's stock performance is truly meteoric, what specifically are we looking for in the underlying operational results that would justify this kind of run?
That's the key question. Does the business performance match the stock chart?
Let's dive into those numbers because the company's business growth is, well, it's also really impressive.
Okay.
In the first quarter of 2025, Palantir posted revenue of $884 million. That's a robust 39% increase year over year.
39%. That's strong growth.
And crucially, this was actually an acceleration from the 36% year over year growth they saw in the previous quarter.
Oh, interesting. So growth is actually picking up speed. That's significant.
Diving deeper, the U.S. market seems to be proving absolutely vital for Palantir.
Right. The U.S. is key.
U.S. revenue accounted for $628 million of that total, growing an astounding 55% year over year.
55% in the U.S. Okay,
Yeah.
That's definitely a major driver.
And within that, if you break it down, U.S. commercial revenue saw a 71% year over year increase.
Correct.
71%.
Wow, commercial's really taken off then.
Yeah, and government revenue jumped by a very respectable 45% as well.
Still very strong on the government side, too.
And the deal flow. This is interesting. From their first quarter update, Palantir closed 139 deals worth $1 million or greater.
Okay, quite a few significant deals.
Yeah, and 51 deals worth at least $5 million and 31 deals worth $10 million or more.
So these aren't just small wins. They're landing substantial contracts.
Right. It suggests, real enterprise-level adoption and maybe deeper commitments from their clients. It suggests a strong kind of sticky relationship might be forming. And this strong performance, unsurprisingly, gave management the confidence to raise their full year 2025 revenue guidance.
Makes sense. What are they guiding for?
They're now expecting between $3.890 billion and $3.902 billion. which is a significant jump from the roughly $2.9 billion they did in 2024.
Okay, so looking for well over 30% growth for the full year then.
Yeah, the midpoint of that guidance assumes about 36% growth, actually.
Got it.
And it's not just the top line, the revenue. Profitability is soaring, too.
The bottom line. How's that looking?
Their first quarter 2025 net income was approximately $214 million. That's more than double the profit from the same quarter last year, which was around $106 million.
Doubling profit year over year. That's definitely strong leverage.
Plus, get this, a gross margin of 80.01%.
80% gross margin. Very healthy for a software company. From these figures, what becomes really clear is how they paint a vivid picture of Palantir's accelerating market penetration and its ability to secure these large-scale contracts, particularly, as you said, within the crucial U.S. market.
Right.
The accelerating revenue growth, the sheer volume of these significant deals closed, it shows they're not just landing small fish, right? They're capturing big, valuable clients, which often indicates sticky revenue streams and a deeper integration into enterprise operations. That's really crucial for long-term stability in the software world. This kind of operational strength, well, precisely what you want to see is the foundation for a high-flying stock.
Okay, here's where it gets really interesting. Because Palantir co-founder and CEO Alex Karp himself weighed in on this. He stated, and I'm quoting here, "We are in the middle of a tectonic shift in the adoption of our software, particularly in the U.S."
A tectonic shift. Strong words.
Very strong. And he also confidently asserted that we are delivering the operating system for the modern enterprise in the era of AI.
The operating system for the AI era. That's a huge claim, a bold vision.
It's a massive vision, right? And these operational numbers we just went through, well, they certainly seem to give it some weight. But even with all this phenomenal growth, the classic investor's dilemma always looms, doesn't it? Are the expectations already just too high?
Yes. The other side of the coin.
Let's confront that elephant in the room, the valuation.
Indeed. While the operational growth is, frankly, undeniable, the market seems to have already priced in far more rapid growth for years, maybe even decades to come.
Okay, so what are we talking about numbers-wise?
Well, Palantir's current market capitalization sits at about $365 billion. A huge number.
$365 billion. Okay.
Now, let's look at the valuation metrics. Its price to sales, or PS ratio, is approximately 93 times. And that's based on the high end of management's own 2025 revenue guidance.
93 times sales. That sounds high.
It is high. To put that into perspective, right, for every dollar of sales Palantir is expected to generate this year, the market is valuing the company at $93.
Wow.
And if you use trailing 12-month sales, so the sales they actually reported over the last year, that number jumps to 123 times.
123 times trailing sales.
Yeah. And the source we're looking at highlights that, this would be a staggering figure even for a price-to-earnings ratio, which inherently values profit, not just revenue.
Right. PE is usually higher than PS, not the other way around by this much.
And speaking of price-to-earnings, Palantir's PE ratio currently stands at a striking 672.
Wait, say that again?
672. Yes, you heard that right.
Okay. 672.
To put that into perspective, for every dollar of profit the company makes today, investors are currently willing to pay $672 for its stock.
That just seems astronomical.
It's a valuation that screams future perfection, and then some.
Yeah.
It implies earnings would need to skyrocket exponentially for years and years to come just to justify it. So this raises an important question. The market seems to have already priced in this incredibly rapid growth for years to come. In essence, investors have already bid up the stock to a level that basically prices in the most optimistic assumptions possible for this company, assuming they hit or even exceed every growth target, way out into the foreseeable future.
So, okay, with that striking 672 PE, many might argue, but look, this is a cutting-edge AI company. It's in a tectonic shift, like Karp said. Don't these kinds of companies deserve higher valuations because of their disruptive potential? How does the source address that, that bullish perspective when looking at these numbers?
Yeah, that's a fair point, and it's certainly a common argument you hear for high-growth tech, especially AI right now.
Right.
The source definitely acknowledges Palantir as a great company and clearly a leader in the AI space. However, its core argument, basically, is that even with that immense potential and that leadership position, the sheer magnitude of these valuation multiples.
The 93 times sales, the 672 times earnings.
Exactly. Those numbers mean that the expected future growth is already so incredibly high that it leaves very, very little room for error, or even just for, a slightly slower than expected pace of growth down the line.
So it's not about if the company is good, but if it can possibly be that good consistently for that long.
Precisely. It's less about the company's fundamental quality and more about the price you're paying today for that quality and all that future promise.
This really brings us to the core challenge, doesn't it? How do you weigh such compelling, operational numbers against such sky-high, maybe even unrealistic expectations built into the price?
It's the classic growth versus value tension amplified.
Which leads us straight to the practical question for you, our listener. What should you do when you're faced with information like this? You see the amazing growth, but then you see the valuation.
Well, the source material we're drawing from is very clear that the decision is, of course, always a personal one. Investing always is.
Sure.
However, the author of the article indicates that if they owned the stock, they would sell it at these levels.
Okay, a clear sell opinion from them.
Yes. And for those who don't own shares currently, they said they would avoid it like the plague at this price. Pretty strong language.
Like the plague. Okay. Doesn't leave much room for doubt there.
Not really. Now, they do acknowledge the caveat, right? They say, of course, I could be wrong. It's always possible that Palantir exceeds even my most bullish assumptions, which is fair. Anything's possible.
True. Predicting the future is hard.
But the overall sentiment from the source is pretty clear. Palantir's a great company, but expectations are simply too high.
Mm-hmm.
They suggest that investors would be wise to wait, see if they can buy shares at a better entry price down the road, essentially saying there are likely better places with less risk and greater upside potential in the market right now.
So what we've really seen today with Palantir kind of encapsulates a core tension in investing, right?
Absolutely.
You've got the undeniable momentum of a thriving business, driven by really strong operational results and leadership, with this bold vision for the era of AI.
The tectonic shift idea.
Exactly. But that's contrasted really sharply with the valuation that, at least according to our source today, requires an almost unprecedented level of future success just to justify its current price tag.
And, that leads to maybe a final provocative thought for you, the listener, to ponder.
Okay.
Given CEO Alex Karp's assertion that Palantir is building the operating system for the modern enterprise in the era of AI, right? And we're in this tectonic shift. How much future growth and societal transformation is realistically already priced into its current valuation?
Right, how much is baked in?
Exactly. What would it truly take for a company with such incredibly high expectations to continue exceeding them, not just for a few quarters, right, but for years, and maybe even decades to come, to actually make today's price look reasonable in hindsight? That's the multi-billion-dollar question, isn't it?